Hello guys, you're welcome back to Forex Trading Made Easy. My name is Chinedu Anoha, and today we are going to be talking about technical analysis. Now, technical analysis, like we discussed previously, fundamental analysis. So the way to know when to buy and to sell, and we said that fundamental analysis takes advantage of the micro and macroeconomics of an economy. But technical analysis, like the name implies, looks at past history or looks at the charts to be able to determine what may happen in the future. And therefore, we are looking at repetitive events. What has happened? What are the features that usually repeat themselves in the forex market, in the financial markets, that tends to repeat itself over and over again and generates some pattern or some direction for traders to execute entries and exits. And this is a rundown of what we are going to be doing today. Candlesticks, candlestick patterns, which include the spinning top, doji, engulfing hammer, hanging man, inverted hammer, and shooting stars. We've done those ones. These are all candlestick patterns that determine entries and exits. Support and resistance levels, we also touched it at the beginning of technical analysis. We are going to start with trends and trend lines. We discussed a little bit about trends, and we will talk about trend lines in this course. We are going to also look at channels, double tops and bottoms, head and shoulders, triangles and flags, Fibonacci, Elliott wave, and so on and so forth. Now, these are all concepts of technical analysis. Now, there is also another concept of technical analysis that has to do with indicators. So we are going to also talk about technical indicators, which are basically mathematically generated from price. Okay, so today we are going to talk about trend lines, trends, and trend lines. So let's look at that for a bit. So let's go to the chart and let's look for a smaller time frame. Good. Now this is a trend. A trend, like we discussed in a previous course, we said a trend forms lower lows and lower highs, lower lows and lower highs for a downtrend, higher highs and higher lows for an uptrend. And so when you are seeing an uptrend or a downtrend, you will know them by their characters and characteristics. A downtrend forms lower lows, lower highs, and uptrend forms higher highs and higher lows. Now, when we talk about a trend line, we are looking at a type of support and a resistance level that stems from a couple of previous lows or previous highs, depending on what we are looking at. So I'm going to spot a perfect example so that we can experiment with that. So for example, if you are looking at a trend line, you are looking at two previous highs, drawing trend lines that will stretch across. Let me change the properties of this trend line to include the rays, ray light. Okay. So when you draw a trend line, it takes from one point and extends, and it is a form of support and resistance within a trend. So let's look at here, for example, this is a high. So we can choose to take the high, let's say from here, okay? If you drop a trend line showing you possible future places where price could bounce off and go down or break, this is what we call a trend line. So a trend line has to touch two previous points, and technical analysts use trend lines a lot to determine possible trend continuations. Okay, so there is this saying, always trade with the trend because the trend is your friend. Okay, so as a rule of thumb, most trend lines, most traders use trend lines to determine when to re-enter an existing trend. So you see price forming higher highs, higher lows, or lower lows, lower highs, and traders will want some excuse to re-enter an existing trend, and you see that presenting itself in a lot of cases. Okay, so trend lines take this form and is a combination of a couple of previous highs connected together. So the more trend tops are connected or the more bottoms are connected, the more powerful the trend line is. Okay, so let's look at a bullish trend line to see something like this. You can see a previous low here and it extended all the way. So these are two previous lows and you see price bouncing off at this point. This is a bullish trend line. So price has been going back and forth, bounced off here and continued. But in this case, it broke through and usually tends to retest, but this time broke it as well. So traders use trend lines to identify strong trends and in many cases ride them until they yield uh, some profit. Okay, so this is trend line. This is what trend line is all about. Drawing trend lines can be tricky at first, but when you perfect your skills, when you with continuous practice, you perfect your skills. So what I want you to do is an assignment. Go to your chart, discover possible trends and draw trend lines. Remember, when you are drawing a trend line in an uptrend, you are drawing only the bottoms. So for example, you are drawing a trend line in an uptrend, you are drawing only the bottoms. When you are drawing in a downtrend, you are drawing only the tops. Okay? When you are drawing a downtrend, you are drawing only the tops. So you see price bouncing around the trend line a number of times, starting from here, bounced here, and probably, okay, broke here but struggled a bit. So this is what trend line is all about. So look through and see what you can find on your chart. Draw trend lines. Let's see if you can get it correctly. And please note, it is not recommended to trade a loan with trend lines. Remember what I mentioned in the previous course, there is something we call confluence of factors. Drop a comment at the comment section. Let me know if there are questions you have. If there is no question, there is a description at the a video at the description of this video. Click the link. There's a link there. Click the link at the description of this video to be able to get free signals and also get started with a lot of fun stuff and information regarding Copyvest Academy. See you in the next course. Bye for now.